That's profiting on stocks in a tight channel. We've talked about Channel Finder. We've talked about Channel Finder, but there's a better scanner for sideways, and it's called Gyrating Stocks. So what's a gyrating stock? Well, it's a lot like a hula dancer, where the stock is moving fast and crossing the center line more often. So here's a current chart on the IWM, and stocks that gyrate. What's gyrate mean? It means it's going up and down, crossing above and below a midline many times. And look at IWM. So the more this is the middle line. That's the middle part of the trend, the median part of the trend. And look at how many times the IWM has crossed above and below and above and below and above and below and above and below. It's gyrating around this center channel, and the more stocks do that, the more likely they are to stay in the channel. And so that's really what this is about. And there is a nice little scanner that I want to show you here. But before I show it to you, I want to take you through a multi-part scanning, like washing the data, such that we can find the very best gyrating stock candidates for trades like calendar spreads and even iron condors. So we're going to use something called filter list slippage. All right, now this is good for calendars because we're buying and selling options at different expiration dates, and slippage can be a problem. So we want to make sure we have really tight slippage. I'll show you how to build the tight slippage list, and then we're going to feed that list through Gyration Finder and find stocks that are gyrating across that center line more than others, and we're going to find really good candidates. So the first thing we're going to do is go into something called filter list. These are scanners and Tom's tools, as you know. And what we'll do when we come into the scanner is we're going to say we want narrow bid-ask slippage. All right, and what we're going to do, not take 1%, we'll change the average slippage number to 0.5%. Now, what's important to note is that the calculation for slippage in this scanner is not based on the actual slippage between the bid and the ask. It's actually the slippage that says if the stock moves 1% or 0.5%, then that stock movement will cover the slippage. So it's another way to calculate it. And I don't really prefer this method, but it's what the scanner does. So in order to get tighter slippage than 1%, which is kind of wide sometimes, we're going to drop this option bid-ask spread average down to 0.5%. And then pick your list, penny plus weekly. You can even do all optionable stocks. Then you click search, and then you save that list by clicking replace my stock list into a temporary holding list. And then we'll take those tightest slippage stocks, and then they'll run them through the Gyration Finder. We'll select inside parallel channel, and then we'll hit search, and then we'll take those results and save them in my stock list. And then we'll have tight slippage gyrating stocks, and then we can take that list and go looking for calendar spreads, which I talked about 2 weeks ago. So there is a sniper education session about calendars. If you're new to them, you can watch that. I'll review again, of course, here this morning. So let's go take a look. I'm curious. Wow, that slippage, that spread's not going to happen. Doesn't look like. We may take another look at it. Keep working it if you're interested. Okay, let's go into the scanners. First off, make sure we got today's date. No, that's Friday's date. That's okay. Let's go to website, lists, filter lists, select 1% bid ask. That's too high. So let's change the max to 0.5. And let's go after penny plus, which are already pretty tight, but we're going to get tighter than the tight. Hit search. And then the result of this will be out of the penny plus weekly stock list, the 56 that have the tightest slippage out of 663 stocks. So we could save this in my stock list, but you may even want to create a new list called, let me see if there's any here I want to get rid of. I don't see any I want to get rid of. Yeah, we'll do this one. You could even say, all right, I want to save this list as tight penny plus. And then you can have that list for other things. So this is a nice little target list of really the best slippage stocks. And you can look through this list here, you'll see some names you really recognize, the big names. Citigroup, Coca-Cola, Cat, Oracle, JP Morgan, MasterCard, Home Depot, McDonald's, IWM's in here as well, I believe, right? Let's see. Yep, there's the IWM. We also have the SPY, the SPX, and the SPYs, and the Qs, and gold. This is a really good list. So let's go ahead and create a tight penny plus list. All right, so that's saved. Now we have 56 stocks in this list. And now what I want to do is go into the gyration finder. Stocks, stock analysis, gyrations. You don't have to worry about any of these settings over here. This gyration finder can do a lot of different things. It can look for an outside parallel channel where the stock is very volatile, inside closing channel like a pennant. You can look for outside. I mean, there's so many different scanners here. We're just going to go inside parallel, and as is always the case in Tom's tools, if you click help, you can get help on this scanner, and it will take you through each of the wizard settings as well as the output from the scanner. So feel free to play around with it. I want sideways though. That's what I'm interested in because the markets are going sideways. Let's find the stocks that are going the most sideways in a sideways market. So next, I want to select my list. Let me find it. Penny plus. This is the hardest part. Where is it? There it is, tight penny plus. And then I hit search. It was only 18. That's fine. That's all I want. Look at some of these stocks here. We can look at the picks here. You know what I like about Johnson & Johnson is the stock is living between the 200 and the 50. So that's a nice little two walls fence line around the stock to keep it gyrating. Here's the IWM. I tell you, I like this one. And this is the one I want to do because of this beautiful choppy sideways channel. Lots of crossing, strong resistance up here. That's going to be a good one. But all of them are moving sideways. And you can see the number of times that the stock has crossed above or below the center line. So IWM has crossed 6 above the bullish and then 4 below the bear. So all of that, the more crosses, the better. That's the point, I suppose. So these top ones are the best. But let's go ahead and save these 18 in my stock list. There it is. I'm going to hit replace. Okay, now what do I do with this list? Well, you go to searchers, single strategy, and the strategies that make sense, the most sense, are condors and calendars. So let's go after calendars to start with. And similar to a lot of these scanners, there's a whole boatload of different types of scanners that you can do, different types of calendar spreads. I'm just going to go after the basic, at the money, put calendars, B2B. What that means is it's using consecutive months, consecutive expirations in order to construct the calendar. There's reasons for that. If you want to know about them, let me know. Let's go after my stock list and hit search. And let's see what we have. All right. So again, all of these are going sideways. Look at Walmart. Yeah, baby. Problem with Walmart? Earnings. You do not. This is so critical in both iron condors and calendars, is you don't want to put on a calendar or a condor with earnings only 6 days away. The reason for that is IV rushes. And with a calendar spread, the IV will rush more in the short option than the long, and you can get crushed. So bottom line is, don't even think twice about taking on a calendar spread with earnings approaching. So all of these here are off the table for the moment, but we can look at them after earnings. So those could be good ones You know, let's see this one here on Walmart, Home Depot, you know, next week or so. Those will be good looking trades. So we'll keep an eye on those for maybe next week. Gold is on the list here. What you have in this scanner is going to give you the stock price, the strike price. And here we're selling the July options and buying the August options. These are puts. It's going to give us a potential 301% return on investment. Now, gold is a really liquid ETF. We could take a look at this calendar by clicking, went too fast there, clicking the leg prices. And one more thing before I even go to the calendar. When you go through this list, we want to keep an eye on the strikes, which will be the same in both the long and the short, and make sure the strike price is close to the stock price. So sometimes that doesn't happen. You know, sometimes you'll get, like, let's see if I got it. Here's an example where we're using the 155 calendar and the stock's at 153. That's still pretty centered, but make sure your strike and your stock price are close to the same. And when that happens, then you get something that looks remarkably like that. Oh, you know what I forgot to do? I forgot to do something. Now that's a good calendar, but it was a long, let me pull it back up. Let me finish my thread. That was a longer term calendar, which is okay. You know, what we're doing here is we're selling a 70-day option and we're buying a 98-day option. And this risk graph is over the next 70 days. I'm not interested in expecting gold to stay in this range, although it's big range for the next 70 days. So if you want to do shorter term calendars, which is what I want to do, you go into the wizard criteria, and there's a lot of criteria here, but the two criteria I want you to focus on are these. All right. So days to expiration of the primary option, that's the short option, should be no longer than 30 days. And the days between option expirations should be no more than 30 days. All right. We might sell a 30-day option and then buy a we might buy a 30-day option, sell a 30-day option, and then buy a 45-day option, which would be a good calendar. So anyway, bottom line is on these two settings here, change the maximum to 30. And that will give us shorter term calendars. I'll hit search. And then we go through this whole list again. Now if I go find, now gold is further down, but this is the one I want to, we'll come back to gold perhaps. There's one down here on gold. We could look at that one, but with 15 minutes to go, let's go look at this one. This is the IWM. The stock's at 172 and the strike 175. Let's see if there's another one going down a bit further.